Mic check. Can you guys hear me? If you replied yes, I couldn't hear you because you're probably muted.
Loud
Can
and
you hear me?
clear.
Okay, cool. So let me just start off by saying Happy New Year, everyone. Um, yeah, Happy New Year. Uh, I know sometime in December I mentioned that I should have done a indicator video, and I'm going to be 100% honest why you did not get that video. I did that video 3 times, but the 3 times I did it, I included it in something else. And all of those something else stemmed from conversations I was having with other persons. And after the call, after I did the recording, after I was sitting down thinking about the call, I felt like I was a little bit overboard in some things. Because I vented a lot in the recording. It wasn't supposed to be an indicator recording, but I ended up venting in the recording a lot. So for that reason, I opted to not post the video. Okay. This is this. Okay, cool. So I am going to start this video with a little introduction to the indicator, how to use it, etc. And around about sometime later, what's it called again? The data should be out, and then we could hop into that. Yeah, hope you brought questions. So, I don't remember how long ago I introduced an idea that we dubbed dark pool. Right, we dubbed it dark pool as a joke to the whole ICT great pool idea. That's how we kind of joked around and called it dark pool. But it was essentially a technical structure that I shared, which gives you a little bit more clarity on where air quotes liquidity can reside, and that liquidity definition transcends the basic um, above a high and below a low nonsense. Because while it's a good place to start by looking at liquidity through the lens of range high, range low, above a high, above below a low. If you in 2025 or 2024 believe that those are the only places that liquidity reside, then you have not spent enough time thinking about what you're doing, basically. Liquidity don't just reside above highs and lows. It can reside inside ranges. It makes sense when I say it like that, because we have internal liquidity and external liquidity. So essentially, these are areas where you could anticipate liquidity to be. You treat them like a key level. And if you know where your key levels are, then life becomes a little bit easier. You know where to look for a particular technical structure, and then life is good. The indicator is set up so that you cannot mess with anything besides selecting a time frame that you're comfortable with. And I believe that that's the best thing I can do to help you look at things mechanical. There's a lot of things I wanted to do in December that I should and probably will do in January, and it's going to be a whole lot on how to actually analyze charts and not just mark up a chart, like just mark a PD array and then pray that something happens there, right? I want to go through a couple of things, and I might include some unconventional methods as well, just to read and understand what's going on, so we can stop forcing what we'll call them again, entry fractals to work. You know entry fractals, you've traded it a million times, they work, you keep using them in the wrong context or under the wrong narrative, They win sometimes, they fail sometimes. You don't know what you're doing right or wrong, so you don't get to improve. So I want to touch on that for 2025, and hopefully by the end of the year, I get more DMs from persons that said that they found their ways, and I can slowly continue to phase myself out of the space while everybody becomes self-sufficient. Okay. So with that being said, I have analysis on this chart, which you should recognize, in my opinion. Just confirm. No, so these are not the exact what's the word I'm looking for? This is not the exact markup I gave you. This is a different chart. But this was done before the chart I actually gave you. So with that being said, you could see the H1 order block here, daily order block here, sorry. So let me take off the drawings and I'll walk you through my thought process here. This is the daily chart. We're in the start of a new year. So I believe we need to know where we are in respect to the last range that we traded, which is the last year. So you want to know the start and the end of the year. Then just put a fib on and then look at what the delivery was like inside it. So allow me to digress a little bit. Where is January? All the way down here. Somewhere here. Okay, cool. So this is the previous year. That's the previous yearly range. Clearly, we can see that we are in the uppermost portion or the premium portion of the last year's range, because the discount portion on the open is so far away, you don't need to pay attention to all of this unless you're like a long-term swing trader. Intraday traders, you could start reducing your area of focus. First thing you can do, put a horizontal line at the 50% level. So we will not pay attention to anything that is below here. So then you could refine your area again, look at the upper 50%. And for most persons, this is fine and good. I don't trade like this, but it helps me to see things. What I will do for myself is I will look for the last time the daily chart broke above a significant daily high or a 3-bar daily high. And that's going to be right there. So now I have the option of choosing, do I want to add horizontal lines at each of these levels, this high, 50% here, and this, and then keep them on for confluence. If this method of analysis is strange or weird to you, I would recommend doing that and then putting like labels on it so you know what it's for. So later on, you don't look at it like, oh, price touched this line, and since it's a line, it must mean that I want a reaction of the line, not know what it's supposed to do. So for journal and clarity, label the lines. Now that I have the last time price broke above a significant high, I know, let's put the significant high there for context. I know that everything that I need to trade today, next week, this week, is going to be inside here. When we trade above here and close here, so the start of a new delivery is the open price right there. So everything I need until, so listen closely, until we put a 3-bar high above this blue line and a 3-bar low below this blue line, everything I need to trade would be taken from right there, right there. This stops me from trying to be superhuman, trying to force myself to read price and force myself to see things that really doesn't matter. Once this candle closes and the new candle open, until you get a 3-bar high above this blue line and a 3-bar low below this, everything you need will be taken from over here. Looking for long-term sell side, it's over here. You're looking for long-term buy side, it's above here. So when this is, if it's above here, then you know you'll naturally look for something that's above the blue line. So for right now, everything I need to trade is going to be on this chart. Now, after we get a daily 3-bar high and a daily 3-bar low, everything I need to trade will be inside that region. What it means is that before price did this massive drop, this was the area you should be paying attention to. So you'll remember sometime inside here, I was pretty adamant that we've been accumulating buy side and we need to offset that daily sell side. Maybe those were the exact words, but you'll remember the conversation. Big drop. Now we have a range, high to low. If it should break outside this immediate range, then again, we know that what we want is going to be inside here. So to remove all of this from my chart and make it look a little bit more appealing, I'm going to find the low and find the first daily low that's higher than the lowest one. So the failure swing, basically. This is the lowest one. There. For all intents and purposes, this is the sell side liquidity on this chart right now. Long-term sell side. Market trades up, went above the high, big drop. Most persons view this as the order block. You can. We drop. This is the order block for me, or the propulsion candle, whichever you're comfortable with. This is the up candle that's important. Survey says you find 50% of that candle. In extreme circumstances, there's going to be a failure swing inside here. If it's a propulsion candle, you're looking for one that's below here, below the 50%, because price generally does not try to get back above 50% of the propulsion candle. So you remember this chart with a drawing that looks like this. I had this line or this high pegged as buy side liquidity, and this area pegged as your bearish order block. There's a bullish order block all the way over here to the left. I shared that on the chart. Not that relevant right now. This right here is the most important part of this price delivery. Right there. So now all we would need to do as analysts, add labels. That's the yearly open, I believe. This is not the second. Well, apologies. There. This is the yearly open right there. Now, I understand what I'm looking at. I've already done my higher time frame analysis. If you're doing this for the first time, label them so you can get a feel of what you're looking at. Imbalances, all of that. This is one of those unicorn deliveries. By the way, let me just mention that. I generally mention how I don't like seeing Mondays creating the high or the low of the week. So whenever that happens, I wait for those areas to get taken. This was one of those weeks when the market had a Monday high and then it dropped. This is a unicorn because we have Monday running a Monday liquidity. Okay, so bearish order block, buy side, Monday, potential high of the week, yearly open and below. I'm looking for this market to chop around inside this range. From this low to this high. Any time frame I'm looking at, this is going to host anything I consider important. So whether I want to look at weekly chart and look for, I don't know, order blocks, weekly lows, whatever I'm looking at is going to come from here. I'm not so big a fan of looking at weekly charts that much, but there we go. So the indicator is going to calculate levels that are a mechanical definition of what liquidity is inside here, whether it's the green box or the red box. That's it. For simplicity, I look at anywhere there's green boxes, there's unfilled buy orders, and anywhere there's red boxes, there's unfilled sell orders for simplicity. Okay. Which means anytime the market trades into a pool of unfilled buy orders, based on what your underlying bias is, you should have a good idea as to what you want to see inside that. If it's unfilled buy orders and I'm bearish, I'd like to see buy orders get paired with a bearish order block and then we trade low. So that automatically says if I am bearish, I don't want to see a green box above the current market price. Then the market trade up into that. There we go. Lower. Red areas, we look at them as unfilled sell orders. There's a little bit of an echo. If I'm looking at the red areas as unfilled sell orders, it means if I am bullish in unfilled sell orders, I don't want to see the market pair buys with unfilled sell orders. If I am bearish and the market trades into a pool of unfilled sell orders, what you'd expect to find is a breakaway gap or some big push or close through that area. Might not sound so sexy the first time I say it, but you could look at it or think about it sometimes. Not a big fan of the 4-hour chart, so I will not pay attention to that. Feel free to do so if you are. So this here, I have it set to show me levels from the H1 chart because I like H1 chart. If I didn't like that, I'd put it to M15, just as good. Doesn't matter. It depends on what you like as a trader. This spectral edge is the refined version of the code, the one that allows you to set it to one specific time frame. This is what the indicator was before I got assistance creating that part. I couldn't figure that part out on my own. Maybe irrelevant, who knows? I use the spectral edge to refine high probability areas, and I use this one here, which might be relevant to the conversation since you don't have it. I use that to just find every single pool. And then I use an overlapping confluence of, I know the key level already. I just need to see something happen there and I have my bias. Simple. So a lot of unfilled green box means a lot of unfilled buy orders. If I am bullish, imbalance is going to print through here because buy orders plus higher equals imbalance. Buy orders plus bearish bias equals bearish PD array is going to print inside here. So bearish order block. And hence my bias. Plain and simple, nice and easy. Now, push it a bit further. Get this off. Let's say we're looking at M5. I have H1 bias on the M5. It should give you the blue lines as your key level. So the arrows are going to show you where your bias is. This is the H1 bias. Target sell side, target sell side. I added a function to help discipline where it will not just say sell, because you know that these things have to pop up after a candle close, not before, unless you're looking at something else. This will print after a particular candle close. Since it's taken from the H1, it's going to print after H1 candle closes. The blue lines become your key level. You have bias, you have key level, which means everything you want should print around your bias at your key level. Plain and simple. I'm bearish. This is my key level. What can I use? Like, what can I derive from that? Look at the level and look at the structure. Then you can start going like basic, higher highs, higher lows. Here's my key level. What do I want? Is this key level showing the last time price pushed higher to create a stop run? Is this key level saying that a breaker should be here? Is this key level saying an order block should be here? Is this key level sitting very close to lows where I can say, if it closed below these lows, let's start thinking dealing range. That part is where you get to be literal caveman technical analyst and say, whatever prints here that I can see, I trade. No need to think about it. That's it. You could do that for whatever time frame you want. This is the M5. Again, you could load 2 instances of the indicator, by the way. Not so smart in that aspect. And then you could have like an overlapping confluence. But knowing that it's lower time frame and higher time frame built in, you should get multiple of these and they might clash. That's where your own trade management and responsibility will come in. I can't do that for you. So M1 levels and M5, I'm going to use a combination of these to create like an entire trade plan. If I have other indicators, then you could load them on whatever, there it is. If you have like timed boxes, great overlap. Here's an instance of, we have a green box, unfilled buy orders. If your bias is bearish, you're looking for a bearish order block. Price trades up, we have an up candle, didn't close through, I'd be watching the low automatically. No close, no sell. Simple. If I'm bullish and I have this green box, then again, unfilled buy orders, you want bodies through here to create that imbalance, that interpretation that says there's buying in buy orders, so imbalances should be created. And that's why I said earlier, this is where your breakaway gaps are going to form. Nice and easy. So if I know or expect a breakaway gap to form here, what does that tell me about this FEG? Simple. If we're going higher, this FEG is going to stay open. There it is. Plain, simple, all the things. If you are not so technical and you want to include more stuff in what you do, then you could do something that I like to do, which is take your liquidity pool like this, transpose them across time frames, because I'm a scalper. That simple. I am a scalper. I like to scalp. I'd like to see this FEG stay open. Well, M5 FEG. I could start expecting things. I don't have to be like super aggressive and just hit buy here, because we know that's crazy. That's when you start doing money management and not actual trading. Risk management, I mean, and not actual trading. When you just at a level. But a little bit more technical is when you know this is the level that should not be filled. Right? I don't want to see bodies through here. M5 bodies, not M1 bodies. I'm pretty sure you should know that by now. If M5 FEG, M1 bodies can close, it could reduce the probability, but M5, you know. We hit it, we get a buy signal. Buy signal here prints after this green candle closes. You have your key level. Buy, key level. Stop something at the key level. Market drops and puts a down candle at the key level you're watching. Then it trades through it. I mean, should be straightforward. Pretty straightforward. Yeah. So as far as the indicator goes, this is, the rest should be self-explanatory. Transpose your levels. Here's an M1 pool of buy, it's green, so M1 pool of buy side liquidity. And just throw this in there. No extra charge. That's a line ICD used to like to say. I don't know if he says it anymore. No extra charge. So if you've ever been one of those persons who you get a really good entry and the market runs in your favor, but you're looking at something like higher time frame derived, and then the market starts to retrace, and you're like, oh, I need to trust the analysis. I need to whatever, and not do anything. This is something that will help you. Every time a box prints and the market trades in your favor towards it, expect something there. Expect every time a box prints, expect something there. I'm a scalper. I'll derive more from M1. Let's say we went long inside here. Put the RR tool on, no extra charge as well. Some persons would put their stop inside here. This is where the market should not go back below. That's where your stop needs to be. Manage the risk accordingly. You could want to see it go all the way up here. I don't care. When it gets here, you trim. You don't have to overthink. You don't have to get fearful. Just trim when it says trim and relax. That's it. So, being mechanical, this is the trade. There we go. 22. That's 80 points. Mechanical, no thinking. Here's another one printing right now. Buy, key level. There's your trade, enter. For scalpers, this is paradise. You have overlapping levels. I don't want to stray the conversation too much. I'll allow you to look at if you can implement something into your system or just follow it mechanically. That's make that decision. Now I can do a little bit of venting. Over the last 2 weeks, I've had a lot of conversations with a lot of persons, and there's a recurring theme. The recurring theme is one, there's a great lack of confidence among persons who know how to trade. And I don't understand it. I mean, I understand it that we're humans, but I don't understand why. If there's a why is there a lack of confidence if you know what you should do? It should be a lack of confidence if you don't know what you should do. Because if you know what you should do and you have time to put in effort, you backtest your data and find out what works. Backtest the data and see where you should be putting your attention. Trading has been misrepresented by, I dare say, gurus over the year. Please don't come at my neck. As something that you just learn and you click buy, you click sell, and life is good. Or you learn some concept and you click buy, you click sell, and all is good. I'm not the best trader in the world. I'm still very human. I still make mistakes. I still flip accounts and then lose them when I get crazy. I still do everything that a normal trader does along the journey. I'm very analytical, if I say so myself. So I broke up the areas of my trading into different categories. Information overload and analysis paralysis was coming when I looked at a chart and I could see 10 different concepts. I could see ICT, moving averages, whatever. This high was higher, so it's a stop hunt. This is a breaker because all that madness. I don't have to get into the specifics. You know what I'm talking about. So I broke them up into what concepts help with this, what concept help with that, what concept help with that. And I thought about what I need to be a good trader. I need to be able to read order flow. I need to be able to identify a level or an area where the market is likely to trade to, like demand and supply stuff. And I need to understand what should happen here for me to push the button. I can have the best key level in the world and I mark it out and the market hits it and just crashes immediately. I'm not in that trade unless I'm in aggressive mode. You'll get those trades, you'll miss some, it doesn't matter. You have to break up all the stuff into what helps with analysis, what helps with direction, what helps with entry, and you separate them. In the beginning, separate them. Have multiple charts. Charts that you use for just higher time frame key levels. So you know that your process becomes checking your higher time frame, at a specific time. Where is your level? What's something at your level? Break up all of that. If you're more technical in terms of you like fancy words, you could look at order submission, order matching. You can't see volume on a candlestick chart. You can only see the lack of volume. Settlement, all that. Settlement is probably the hardest thing to actually see on a chart. So it's not even entertain that one. But yeah, very mechanical stuff. I think I'm gonna say my advice for 2025 is this. You have too much faith in candlesticks, and that's holding you back. Somebody listening to this has way too much faith in candlesticks, and that's what's holding you back in your development. There's a big green candle. Oh my God, I'm going to sell the house. You sell the house, it drops, it's retracing. You add. It goes up, your stop is there, you take the stop out. It starts to break down. Beautiful. Over the moon with happiness. Same thing. What happens when you have insufficient leverage to withstand this and you lost that trade just because you're over leveraged? What happens when you didn't take anything off here, so everything you could have made here turned into a loss here because there's max drawdown? If you're trading prop, you know that. If you could just weather this storm, and you would have been profitable. Too much faith in candlesticks. I don't know what to tell you to switch that mindset. Really, there's no one fix for it. All I have to say is stop thinking that the market prints your rules because what you understand is what the algorithm is actually doing. It really is, if my rules print, I enter. I'm done trading, and it's 8:54. I'm already done trading. Yesterday I took 2 scalps. Today I took 1. It wasn't this one. It was this one. And that's it. Lies. This is 7:58. This time I was dropping off my daughter, so it would have been somewhere before 7 o'clock. I took this. This is the long I took. Before the setup printed.
Money.
There's my good friend. But yeah, I'm already done. I'm done for the day because I have to leave home in a couple minutes. But yeah, if you would entertain me and my opinions, let's make January more psychology based than technical stuff. What are the things that you keep doing that's all internal stuff? It might be hard for some person to talk about it. I don't know what to say if you're one of those persons. You might like to over leverage on stuff that you consider high probability, but you don't know how to manage over leverage positions. Just open up, let's talk about it. Can't think of anything else, but I think in 2025, anybody who's in my group or who's been with me, following me for some time, you don't lack information to trade. You just lack you stuff, whether it's psychology or it's the biggest thing. Here's it. The biggest thing that most persons lack in my community and outside is you define profitability or growth as being able to closely mimic somebody you admire. And that could be me. You like the way I trade so much that you think profitability means being able to trade like me. That's not true. Like, I don't know who needs to hear it. That is not true. You can be profitable.
Oneself. You have to find yourself.
You have to.
Not to be a clone.
Just remember what I said when I started this. I don't want you to be dependent on me. I want you to be independent. And I'm doing this in the way that I needed to be taught it for me to learn. It's just coincidence or just blessings why I was so analytical. But I think most persons struggle with these things. Somebody buys here, sells here, buys here, sells here. You bought here, and because you saw their sell, Jesus Christ, I need to close this. Even though you already did your analysis, or you bought here and somebody scalped 20 points here. It's nowhere near invalidation point, but you just get crazy. These are the things holding you back. The last thing that's holding you back is the one thing you don't want to hear. And that's why some of the recordings I did last year, they were, I sounded a lot like this, and in my opinion, a little bit too strong. So those I deleted. I think there's only one left, to be honest, because I thought that was good until I started. Anyway, moving on. Indicators, right? Indicators is the biggest taboo in smart money trading since the invention of smart money trading, right? However, a lot of smart money trading shows you where, what high, what low, what imbalance, but it doesn't show you how. So what happens because of that, and this is the con of smart money trading, and you have to be confident enough to accept this statement versus try to form fit or force that it might not be true and this is blasphemous. Smart money trading shows you where, that high, that low, that imbalance. It doesn't show you how. So most persons cannot get involved in a move after it started. They have to be in the trade when it hits the level and print a reversal setup, or it hits a level and it bounces, well, still a reversal setup. If they can't get in there, they never understand how to get in the market because they don't know how to track order flow. There are indicators that can help with that. And I've said it so many times in this call. If you've known me for anything north of 2 years, my chart always has these two icons here. If I'm not in full screen and you can actually see it, these two icons are always here. If you know me, nothing is on my screen if it's not something I consider useful. And I will leave that conversation for another time. Just know that in order for you to truly be profitable, not a profitable clone of somebody else, there are things on a chart you need to understand. One of them is how to use the tools that you use. You have to know how to use candlesticks. What are the pros and cons of candlesticks? My gosh, did I just hit? My brain is saying that it actually tapped the level and I should make sure. Sorry, just a little perfectionist in me there. Visually appealing stuff. So I did not take this trade, but this is a trade that I said I would take. I don't know if those are the exact words, but I mentioned this setup printing here, blah, blah, blah. Not irrelevant. If you took it, maybe I want to see it. But yeah. A lot of the stuff that I thought I would talk about today, I'm really not remembering them right now, but I know it was along the lines of psychology. I need persons to be comfortable enough in my space. I really am not going to judge you. Like, I've made every mistake plus more that you've made. I need persons to confront their own demons. You're struggling because you keep doing this. You have perfect analysis, but you keep making bad executions. Man, let's talk about those things. Let's talk about the things that are actually going to help you and not just shiny penny stuff. But yeah, I'm really not interested in the market today, guys. I'll just be 100% honest, both because I've already scalped and I believe that daily chart should be choppy. It's between the levels. I don't know where the chart is that I actually shared with you. I know for a fact it's not that one. I don't know where it is right now, but I'll find it eventually. But yeah, I believe that this chart, based on the analysis that we did here, is going to be trapped between a range that on bare bone analysis should look like that. If I am being very, very inclusive, then I would take it all the way down to the low like that. But this should be reasonable enough. I think this market is going to chop. Fundamentally, it's the year after an election cycle, which means whoever is coming into office, they're going to come in guns blazing. They're going to be trying all that they can do to make the market look good, which means rallies. In a perfect world, I'd like to get a rally at or below the yearly open, but it's still January, so at or below a monthly low. That's simple. So it's a quiet month for me because I'm waiting for those psychological levels to be created where persons start trusting candlesticks more and then overlap with stuff like this. So like right now, this is a pool of unfilled sell orders because it's red. If you're bullish in a pool of unfilled sell orders, you want bullish order blocks. Sell, market is buying to the unfilled sell orders. Bullish order blocks. I want to see rallies there. If it's a case where I'm bearish, I don't want to see imbalances created here. This is not an imbalance. Look how many times we passed through here. So when I said maybe Monday that this market is underlyingly bullish, but I'm expecting Chop City, these are the reasons. I want to see this go back up. And if it does, I want to see it play around inside this a little bit more. And I'll entertain. If we close, so let me just say something now. Today's what, Wednesday. If Wednesday closes as an up candle, I want to see the market get back above 50% of this. That's simple. If we don't close above this closing price here, then I want to just keep making horrible wicks on the daily chart, but then lower time frame should be scalpable. And that's what I'm going to do. But as of right now, 1 minute chart is saying it wants to push the market lower. This is a 1 minute chart, so lots of time, lots of news coming out today as well. Here's another example. Unfilled sell orders are here. That means if a down candle prints here, in my bullish bias, I expect it to be an order block. So the first thing I'm going to do, if I'm trading, probably not going to be trading, said that 100 times. There. Well, mute, no, point is mute. That would be the high I want to see get traded through. And then my bullish order block. The high would be just about where the blue line is right now. So that's right there. So what's this doing? %100% mechanical. If I believe this market is bullish, trade through here, long. If it doesn't, chill. It's passing through here multiple times. It's not creating an imbalance. So if we get a close through here, this here, or put it simply, a close below this high, heavy rejection, like bigger bodied candles. So lots of stuff for you to study once you review this call. But yeah, and this is something that you'd also love to see. The liquidity, the order block, we don't get a CSD there. This happens. You're unfazed. because it's not supposed to run above if it's not bullish. So imbalance, big body through, reject it. So we're likely going to write this low now, in my opinion, unless it goes through that high. So see, you can analyze this without trading it, and then that strengthens your analysis for what you can actually take. And also, you know for a fact, if you want to trade this, you can't trade this candle. Well, you shouldn't trade this candle because you need confirmation of direction now. See, that's simple. There we go. So, might not have been the sexiest call. Let me see if there was anything in the chat I missed. EON BPRs, of course. Dealing with the jokes. But yeah, might not have been a call where I'm dropping signals or anything like that, but it's still January. Entertain me. Focus on the stuff that we spoke about in December, plus what we just spoke about in this call. Then either DM or just post it in the chat and tag me. You know, I'll see it and I'll respond. Tag me and as to what are the stuff that you're actually in January. I really want to focus on some psychological stuff. So yeah. All good, all good. So I'm gonna end here, step outside, get my steps in. I'm trying to work on my health. Trading has ruined my health. Yeah, trading has ruined my health. So yeah, I'm gonna step out, get some stuff done, likely going to head further on the road. So I'll try to post this before I head out, but I'd love to see more persons finding their way, then slowly phasing out of social media and being consistently profitable. So with that being said, guys, do enjoy the rest of your morning. And we should have more of these for the rest of the week. I'd appreciate if you brought questions for the next ones, though. Yeah. But yeah, that's going to be it for today. And enjoy the rest of your day.